my name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of Paris milling wheat and London UK feed wheat. I'll start with Paris milling wheat. There are many things imperfect with this daily chart. However, I will strive on. Firstly, I use continuation charts as they are the best for seeing what is going on here. Unfortunately, this sometimes leads to changeover gaps, as we saw in March. Yet this market and Paris contracts generally, as those who follow my Paris rapeseed commentary will testify, have a remarkable propensity to fill in gaps, even changeover gaps. So, since the big gap, we've had, well, it depends how you count it, we've had a double bottom that has seen the market gap higher twice since. The last gap is a small one between 359 and a quarter and 359 and 3/4, and this has caused a bit of a problem. You see, that technically means that the action from the big gap was still not filled in until recently. Furthermore, the action from the big to the tiny gap leaves the action since mid-March to mid-April was a possible island bottom. That being said, the market, well, the March-based Andrews pitchfork has been remarkable in showing the bullish angle of attack between the middle time above, currently at 387 and 3/4, and the lower time below, currently 362 and 3/4. Now, the lower time was breached yesterday, but it was with what looks like a possible inverted hammer pattern, a pattern that is usually seen as bullish. And it is this breach, with a question mark on its bearishness, that I suspect may have led to today's somewhat immediate countering combined key reversal up and bullish engulfing pattern, with the market back in the bullish Andrews pitchfork. However, I'm still not that confident about this pitchfork, as if this market really meant to push higher, then today it would have punched up through the very recent 50% Fibonacci line overhead at 367 and 3/4, but it hasn't, so I am still left somewhat questioning its strength. It'll be interesting to see on Monday if the market can surmount the 50% Fibonacci line, as the lower time will most certainly do so, hence caution. London UK feed wheat. A lot less to go on here compared to some other markets, but we can still see some things. The peak in late March was violently countered over the last few days of March with a very large and very small consecutive hammer patterns. This led to a sideways action as the market tried to make sense of big moves up and down, which culminated in a key reversal up and bullish engulfing pattern 2 Fridays ago. This led to 2 gapping higher moves last week, but the resultant move up was limited, even though it was new highs, only moving up to the £325 area before a combined key reversal down and bearish engulfing pattern set the market back down again. This left an interesting situation for about 5 days until this past Wednesday, when the action was in fact an island top. And this situation has since been rectified, but it also gave us an unusual situation today on Friday. We have today a combined daily key reversal up, bullish engulfing pattern and bullish closing long white Mariboso. What was unusual was how this was formed on the back of 2 prior sessions that themselves were being bullish sessions. Very unusual. Anyway, this has left us with a possible pattern for the action since late March, possible ascending wedge pattern, currently 308.20 to 327 even. This pattern is not yet fully formed, as the market has not yet touched the trend lines the required number of times, but it is something to look out for in both directions as we go forward. Thank you for listening. This weekly broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright Tofpik and ADM Investor Services International Limited. Here comes the final bit.